Good morning, starshine.
Welcome to the real world. Whoa!
Mortgage your house and buy Bitcoin with
Breathe air.
there's no second best, okay?
GM. So there's definitely some build up here, and I think that this open interest build up will probably resolve itself. We might see a little bit of volatility today, where you're looking at over here. If we just look at open interest, I'll take off some of these other markers here. You can see that on the way down we had a big spike up of OI. So even as it was falling initially, and then on the last push we saw a big increase of open interest. We had 8k contracts, which is like, you're talking 50 times 8, 400. It's almost half a billion, 500 million of new positions opening here. You saw that big squeeze, took a lot of that out, right? So about 4,000 of that, so 250 million got wiped on that push. And now we're squeezing and squeezing and squeezing. But again, open interest is rising once more. Another 4k, like that's been fully added, fully reloaded since here. Price is flat. Open interest has risen again. So people are really positioning themselves here, which seems to offer some very interesting trading opportunities, I would say. There is fuel there. Now, open interest is not, OI is not a fixed thing, meaning open interest going up does not mean that longs are too long or shorts are too long. Always remember, OI is, it's fuel for the next move. Don't guess which way that move is. Use the price action to determine your next position. Open interest rising means longs and shorts are opening. What matters is who's on the wrong side. And so that's where you follow the move. So you saw it yesterday. Open interest was rising super fast here and rising here and rising here. What happened? It squeezed up. So obviously initially shorts were wrong directionally. Now we've pushed above and took that out, and we've pushed above here and took that out. I think this can squeeze further, but it's already starting to show some signs of potentially reversing there. And if you see price come back down into this area and bounce it like that, and you're starting to see this kind of break, you're looking at a move back to the lows. Because remember, don't forget, we did lose that range. It is a bearish market on the low time frames. So keep that in mind if you're trading intraday. Now, this is a little bit of a look at a peek sneak preview of tomorrow's price behavior weekend workshop, which I'll explain when moves happen, how to view what's going on based on the candles. The nature of how the candles move can give you an indication of what traders are doing and why this move was something that you could have forecasted. You could have seen this coming and been short based upon what was happening over here. You're looking at it through the lens of how positions are building, how changes are happening in open interest, in longs and shorts, and the fuel for wherever the next move goes. But what you don't need to do is, when it's on this part, you don't need to try and short this, because what does it do? It squeezes. You wait until there's the first clear sign of weakness there, a clear sign of weakness, a retracement bounce, falls over, and you could be shorting there. Once it's actually showing, okay, the move up has concluded, we're starting to move down, that's where the potential for a bigger move down comes. So we'll talk about that on tomorrow's workshop. Now, where are we at here? Well, BTC has a gap from the breakdown yesterday, so it can go higher, it can go further. And usually when you start to move into I'll take this over the side, when you start to move into a gap, you should expect the full gap to fill. So there was a gap here, which you can see there, right? There was there. From this area, it's like a fair value gap. Breaks down through, price comes up into it, fills it. That's almost fully filled. There is another one above, which goes from here to there, which price might go up and fill into. But if you're looking at this for, is Bitcoin going to go to new lows? When it moves into a gap like this, it can chop around here and stay and hold and continue higher. What you're actually looking is for that gap to get, because if the inefficiency is filled, right, we hold and we fill, and it loses it, That's when you're looking at, okay, down we go. And that's when you look at your gaps below, one there, and of course, new lows. So you want to wait. It's all about this right side of the V, whether you're shorting or longing. You want to wait until you have confidence that you're actually finished with your previous move and moving into the other direction. I wouldn't have high confidence yet that that's the case. It could be happening, but it's still pretty much rising. And that's why if you see price come down like this and sideways, then you can look at that and say, no, that's definitely finished, at least for now, in that uptrend. What you don't want to do is react every time there's a sell-off that gets, oh, it gets short, but they can just squeeze you again and again and again. And then you'll get an actual break like that. And over here is where you have confidence that it's moving downwards, right? So whether it squeezes higher, which it always can, if shorts keep shorting this, there's liquidity there, there's a gap all the way up to here, and price has only been there. Price has a memory. So on Wednesday, we were at 62k. So it's very easy for price to go back to there. It wouldn't take a lot at all, even in a bearish market. So when you're playing these counter trend bounces, you need to make sure that the correct directional move is down, right? This is definitely moving down and down and down, but the counter trend bounces can take longer and squeeze further than you expect them to. So patience, wait for your setups, wait for breaks of structure, wait for somewhere that allows you to get in. You know, if you're looking at this, how do you short here? Like, if you shorted there, where does your stop go? There? But there's no breaks. Like, nothing has broken in structure, right? So where would you actually see an opportunity to short? You would have to see some kind of break, whether it's here or here. If it did this and did that and did this, then you're able to look at a short. You know where your invalidation is because you've had a break, you've had a failed retest and lower high. And it doesn't mean it will go down, but at least at that point, you're following the correct direction. Right now, the direction is still up. Doesn't mean you have to go long, because necessarily longs aren't great either. It's been bouncing. So it's not like saying longs here are a good idea. Longs were more of an idea at the lows or on the retest. And so when you wake up and you see the charts, you see the market, you should first sit back and think through what's happening here. We had a big move yesterday, which quite often means we have a slow move the next day. And probably it could just keep grinding until it fills all of that, which would be my first expectation. Friday, not much. Consumer sentiment, inflation expectations, there'll be interesting things to see. They're just like surveys, but I don't think that it's going to be like a major market mover today. And then we're moving into a weekend, and weekends tend to be less movement in the market. So we might not see a major move today or tomorrow. It might have some kind of chop between kind of 56 and 59 all the way until Monday. So Friday, you know, you should be looking to exit your positions before the weekend. So then you should be thinking, okay, well, how am I going to trade this? And you might want to look at it around the New York sessions. Where have we been at New York Open on Thursday? Thursday's New York Open was over here, 130. Which is there, right? That's Thursday's New York Open, and we had Wednesday's New York Open was over here. So Wednesday's New York Open did not get retested, so we just sold off straight away on Wednesday. Didn't get a retest. Thursdays we moved up, retested it back below it. That level could get hit. And obviously then we wait and see where does today's New York session open. I would say the best trade will come during New York hours. I would not trade until 1:30 UTC. And if we then see a directional move, like we saw Wednesday, nice move down. Like we saw Thursday, initial move up and then a nice move down. The main market moves are coming in that New York session. In the New York session, probably same thing happening again. So I would hold tight until 1:30. See how the first 30 minutes to 1 hour of New York session goes and trade around that if you're a day trader. If you're a swing trader or position trader, generally not a good idea to take a position right before the weekend. Better off to just wait until next week. And that's it. GM. See you later at 4 p.m. UTC. Live stream. GM.